This is a StoryTrack podcast.
Hi, folks. Welcome to another episode of Building Stories. I'm your host, Steve Harris, and today I'm excited to talk with Jeff Berryhill. Jeff is a founder and managing partner for InLight Real Estate Partners, where they have just taken off and done an insane amount of work. So I'm excited to hear about it. Let's get started. Well, Jeff, first off, thank you for doing the podcast. We are so grateful to have you.
Yeah, I'm glad to be here. Thanks for having me.
So for our viewers who don't know exactly what you do, can you kind of let them know, as a founder of InLight, what your role is there? Like, what are you doing as the founder?
Yeah, so my partner, David Birch, and I founded the firm a little over 3 years ago. And our division of responsibilities is such that David is really focusing on supporting the acquisition team and on transaction execution, and I'm really focused on capital raising.
And how did you get into this? Like, I know you had some time at SunTrust Bank, and like, how did this start though? Like, were your mom and dad in the business, or did you always just love building your whole life? Like, how did this start for you?
Probably like most people, I went through school not really knowing what exactly I wanted to do. But I graduated with a degree in finance and got into banking. And as you pointed out, I spent 15 years at SunTrust. I started doing commercial real estate lending in the very beginning, and then moved to the principal equity side about 5 years in. I just fell in love with the business. I fell in love with the tangible nature of it, and being able to go out and to see a building that either we bought or we built. And so just evolved from there. But no, neither one of my parents were involved in real estate. My dad was a CPA and mom was a nurse, so not anywhere close to the industry. Yeah.
So what did they think when you got into this?
I've been fortunate. They've always been supportive of whatever I wanted to pursue. So, they were really great parents, and, grew up in a solid middle-class family with a couple of brothers, and was always very competitive around the house. But no, they've been great.
Nice. Yeah, I'd love to know a little bit more about your transition from working at Stonemont into starting InLight. How did that happen?
Yeah, I think I just got to the point in my career where I wanted to do something entrepreneurial. That's why I left banking when I did, and I had an opportunity to go to a small real estate private equity firm and really have a first row seat and experiencing how to build a firm and how to grow a firm. And I just got to the point where, probably like many people around my age in our industry, I wanted to have a firm that I could call my own, that I could have more control, and that I could have more the economic benefit at the end of the day. And so it was the right timing, and ended up partnering up with one of my former colleagues, David, and an investor group. And we were off to the races.
Nice. Yeah. How did you and David meet?
So David's a real estate transaction attorney by background. And when I was at SunTrust, he called on us to try to do business with us as an attorney. And we ended up just staying friends. And David was outside counsel to Stonemont when I joined. And so we got to work together indirectly there. And then he ended up coming in-house there shortly after I joined.
And then what were your goals when you guys were going to launch your own place? Like, did you just want to build your own team? Did you just want to have more of the control? Like, what were your goals?
Yeah. So big picture, we wanted to be a little bit closer to the value creation side of the business. In our last firm, we were providing capital to other developers largely. And we wanted to be earlier in that value chain, where we were actually finding the sites, getting them entitled, and bringing the projects together and capitalizing them ourselves versus capitalizing other projects. So that was a big motivation. And then, our other goal was just to build a platform around our core values. It's interesting when you get hired into a firm, you inherit a culture and you inherit a team. But when you're building something from the ground up and from scratch, you get to be really thoughtful around what's important and the people that you want to work with. And so we really focused on hiring a team that had a lot of experience, a lot of diverse experience, but also hiring people that, we wanted to be in the trenches with every day.
What are some demand drivers for you guys on choosing where to have your offices and choosing where to build? Like, what are some of those demand drivers?
Yeah, when we think about markets that we want to invest our capital and our investors' capital, we look at things like population migration. Most investors today tell you they want to be active in the Sun Belt and even more specifically in the Southeast. We've seen, for a number of reasons, people move to the Southeast from the Northeast and from the West Coast, be that political reasons or taxes or quality of life, et cetera. So we've just seen a big move of people to the Southeast, which has created an undersupply of product or distribution space in most of our markets. And we're asset managers, but more specifically, we're developers in a part of our business. So we're always chasing markets and submarkets where there's an imbalance of supply versus demand for space. We always talk about demand drivers when we're thinking about locations for either buying or building industrial assets. And there are really no bigger demand drivers in our space than seaports. So you think about the millions of TEUs or 20-foot equivalent units of containerized cargo that come into those ports every year. And so they're just they're natural feeders for our business. That product has to come off of a ship. It needs to go on a truck. It's either going to go to a transload asset or it's going to go sit in a distribution center before it moves on to another market. So we really have a concentrated effort in and around the ports, and in particular, the ports in the Southeast. And we've seen big market share shifts from the West Coast to the East Coast ports over the last 10 years. We've seen a lot of infrastructure investment and spending by the states in those ports to increase the flow. And so it's just really been a big focus for us. It helps that from a proximity standpoint, those ports are near, where we live and where we spend our time. And so we're always looking for land that is as close to the port as we can get. And so whether that's buying or building, that's a big part of our thesis. And one way we do that is we get close to the executive leadership teams at the ports. So we're really well embedded with the Port of Virginia and Norfolk, Charleston, Savannah, and Jacksonville, because it's important to us to understand what's happening in the market, what those port leadership teams need in order to increase distributors coming through the market. And so we always spend a lot of time with those groups, just trying to make sure we're meeting their needs.
What are some challenges that you all are dealing with now?
When we think about value in a piece of dirt, the entitlements are critically important. So your zoning, your ability to build distribution space in a specific location, it's gotten really difficult today to rezone land from agriculture or from residential or really any other kind of use to industrial. It tends to be a heavier use that has more truck traffic. And so, when you find land that you can build on, it's extremely valuable, whether that's, you're building greenfield or you're buying existing. When you think about the not in my backyard kind of movement, you've got, it's interesting. Most people want Amazon to deliver boxes to their house every day or multiple times a day, but they really would prefer that the warehouse or the distribution space is somewhere else. And so, with social media, you tend to, there's a lot of like local momentum and opposition around against rezonings. That's more prevalent in certain markets than others, but it is a big focus for us as we think about what markets to be in and where to deploy capital. So, you're always thinking about ways to have a win-win for everybody, have a win-win for the community. Whether that's improving the road systems, improving intersections. We even recently put a dog park in next to one of our distribution centers to make the city council and local residents happy. So,
Nice.
it's a give and take.
So you just brought up a win-win, and I've seen win-win on your website in a few spots. Do you want to talk about why a win-win is so important to you and your team?
Sure. I mean, it's really just common sense. I mean, if you have a relationship with somebody and it's one-sided, they're not going to feel very good, and they're not going to want to continue to do business with you. And it's incredibly hard to gain a client for the first time. It takes a lot of time and effort. And so, why do all that work just for a transactional type of relationship? So we really try to design our structures with our investors, and with our clients being tenants, with brokers in the market, and with our teammates, where really everybody wins together. We think it's just good business.
So as you guys built InLight, what sets InLight apart from your competitors?
We're really a local boots on the ground type operator. There are so many of our bigger peers in the industry that raise massive amounts of capital, and they cover. They may cover our asset class, but they cover all asset classes, and they cover a big swath of the country. Our one of our core beliefs is we're going to be most successful if we have intimate local knowledge and intimate relationships locally. And so we use the term hyperlocal in our business. And so the way we're set up is our investments team, senior professionals have a support team under them, and they intentionally only cover a couple of markets. And so we really try not to spread them too thin, so they can be in their markets all the time. They don't need to live there, but they need to be there several days a week. They need to know every property, whether that's land or buildings, who the owners are, what their basis is, how competitive they can be, who the local intermediaries are, who the local economic development authority relationships are. And so, we want to be in a position where we are getting the first call and the last look on opportunities. And, we pride ourselves on being very proactive and making unsolicited offers on assets that we want to own, that meet our investment criteria, but that are not on the market. And really the only way to do that is to invest in the team, invest in the platform, to be immersed in the local market and not, fly at 30,000 feet like a lot of capital allocators do in our space.
And speaking of the team there, if there is someone who would love to be where you're at one day, or would love to work with you or join your team, what advice would you give someone who's new in the business to kind of get to where you're at, or to maybe join you and join your team?
Yeah, I would say, a career is an adventure. Don't feel like you need to start at the end point. I started and spent a long time in the banking world and enjoyed that and learned a lot. But had an opportunity to do something different and was able to do that and capitalize on a lot of the experience and relationships I had. And so I would just say, be patient, enjoy the ride, and, work as hard as you can, be an expert at whatever you're doing, and then, and be open-minded. And if you're in a different part of the industry and you want to get into the asset management side, or you want to get into the development side, or you want to get into the capital side, just network. I mean, when we were growing up, we didn't have LinkedIn, right? We didn't have, a lot of the tools that people have coming out of school now. And so I would just say, network, try to get a mentor in the industry, somebody that's experienced, somebody that can guide you, somebody that can open doors for you. That goes a long way.
So you brought up LinkedIn there. Do you want to talk about things that you guys do for marketing?
LinkedIn is probably the most powerful marketing tool that we have, just given our size. We hired a young lady named Chloe. Has a lot of experience in marketing and branding. She's really helped us grow our LinkedIn presence. I think we started out 18 months ago with about 800 followers on LinkedIn. And today we've got about 5,500. And so we made a big push for visibility and just getting out and telling our story. But we also have a podcast, which my partner David and Chloe do together, and they're interviewing other people in the industry. So we expect that will get us some good exposure as well.
Nice. What is their podcast?
It's called the Enlightened Podcast, which is, of course, is a play on our name. But they're interviewing people in the industry. Like their first interview was a port economist, Walter Kimsey, based in Savannah, that we know well. So just really trying to get our audience access to influencers in the market, people that they may not have an opportunity to see or hear from on a daily basis, but that are important to our industry.
Awesome. Well, that's great. I'll have to check out their podcast.
Great. We appreciate it.
Yeah. Well, so when you're not at work and not doing all of this great stuff, then what do you like to do?
Well, I've been blessed to be married for almost 20 years. So I love spending time with my wife, and we have 4 children. So we've got 2 boys and 2 girls, ranging from 15 down to 8. So we spend a lot of family time together, doing kids activities. We love to travel. I love to play golf. So, it's just a lot of good family time.
Nice. Well, cool. And then what's next for you all? Do you have a big job or project in the works that you would like to talk about?
Yeah. So priorities for us right now, we've got a couple big development projects that we're in due diligence on, one in Jacksonville and one in Savannah, both markets that we know very well and that are healthy from a supply and demand picture standpoint. And then we're raising our first fund right now. So for the first 3 years of our business, we've raised project level equity, and we've accomplished a lot in 3 years. And we've done nearly 30 transactions and deployed around $600 million of capital. But that's incredibly inefficient to do it on a project by project basis. So we're focused now on raising our first fund, and we're doing that in a joint venture with one of our most active LP investors, a group called Black Salmon Capital in Miami. Just people that we've developed a great relationship with that culturally are similar to us, really focused on excellence in acquiring and owning the best products. So for us, that's going to allow us to spend more time on growing the business and aggregating assets and managing assets, and less time on a project by project equity basis going forward. So that's a big part of what I'm spending my time on this year.
Nice. Jeff, so can you talk about the logistics side of things and how that all works with you?
Yeah, I think this really gets down to why we focus on industrial. We spend all of our time on industrial. We think if we're dedicating ourselves to an asset class, we'll be able to be narrower and deeper in the space and just, again, not spread ourselves too thin. But in industrial, we say logistics is very logical, right? If you think about the right size box in the right location, for example, near a port or in an infill location, that asset should always be full. It should never be vacant. And as long as demand is increasing, we should continue to see rent growth in that asset over time. That's different than a lot of the other asset classes out there, whether you think about office or retail or residential. Those asset classes can be negatively influenced by consumer behavior and consumer preference or even aesthetics. But a distribution center or a warehouse in a key location isn't going to be subject to that same type of consumer preference in terms of its valuation long term. So that's just good old fashioned defensiveness when you think about and risk mitigation when you think about the asset class for us.
Nice. So since InLight is a newer company, can you kind of walk me through these past few years?
It's really been fast and furious first 3 years. The first year was really focused on growing the team, growing the brand, putting our systems and process in place, and building the pipeline. Year 2 started to be about execution and continued growth of the pipeline. And then, it's interesting. We hit, May-ish of 2022, and the industry really slowed down when the inflation story started to get louder and the Fed started to raise rates. The development side of the business really slowed down. The construction financing markets have remained tight. The banks are still capital constrained. And that's really put effectively a cap on new supply in the industry. So I think we have all had to be a little bit more disciplined over the last 18 months. But the beauty of that, the benefit of that is the market has not gotten oversupplied in most markets. Vacancies have ticked up a little bit, but even with leasing demand returning to pre-COVID levels, it won't be long before that vacancy is eliminated from the market. And so I think we're probably like a lot of our peers. We're trying to focus now on finding sites where we can develop and deliver product to the market in late 25, early 26, where we believe there's going to be a significant gap in deliveries and gap in new product available for tenants. And so it started off really quickly. The first 2 years, the last 18 months have been a little bit slower, but we anticipate seeing a reacceleration near the end of this year and really a healthy market in 25 and 26.
Well, I hope you're right. And I can't wait to see all of what you guys are doing. And thanks again for all of your time. And thanks for doing the podcast.
Thank you.
Okay, bye. Thanks, everybody, for checking out another episode of Building Stories. To hear more like this, like and subscribe. And if you want to hear more about the great work that StoryTrack does for the building industry, check out storytrack.com.